Let me let Jordan in here. There we go. All right. We are now on class number 3? Class number 4? One of the two. We're on one of them. We kind of flying by a little bit. Um, I always like to start by asking if there are questions about anything from the last class. The last class we talked more about candlesticks. We talked more about levels, trend lines, and we actually kind of went in depth a lot about option contracts. So is there anything from last class, or it don't even have to be last class? It could be something that you've seen if you've been looking, in the group chat that you might not understand, or if you've been on the live sessions. Anything, any kind of question you have. It doesn't have to be anything from here. If you got any type of question, that's fine.
Yeah, I got one budget on trend lines. Is there a certain so I know you look for like either open and closes or wicks, but when it comes to I guess my question is like when you drawing out the trend lines from like a certain angle, is it like sometimes I might draw a trend line, but like, man, that's too wide, or that's not at a 45 or a 90 or whatever. Like, do you have a certain like what parameters are you using?
Oh yeah, I understand what you're asking. Yeah,
Yeah.
that can be a tough part. We're gonna look at that more today. I usually like to connect it to it's hard to explain without showing you.
Yeah.
I'm gonna have to really show you. It's hard to explain, but it's really like I don't know. This might not make any sense when I say it, but it's that wherever that second connection is where the trend line stays. I don't know if that makes sense. I probably have to show you.
Yeah. Yeah, I
Um,
think I know what you're saying, but I think I know what you're saying. But yeah, probably when you show it, I understand. But I think I know what you're saying when you say the second one is where it stayed.
let me see if I can. Let me pull up. Let me share my screen. I don't know if I try to explain it, it ain't gonna make no sense without saying it or seeing it rather. Let me see what's on here. AMD. We could probably use AMD. Let's look at AMD from something like the 4 hour. I think well, you can correct me if I'm wrong, but I think you're basically asking like, how do you connect the trend line? Like, you supposed to connect it like going through like here or
Yeah. Yep.
yeah. Now that is the beauty is kind of in the eye of the beholder. I always like to say I like to use the same rule as the support resistance, like that same going off of the wick, that next wick or that next candle body. If it doesn't have a wick, you just don't want it to kind of be kind of like this, where it's not the trend line has to be at a point where it's like holding as a support or resistance. Like it
Okay.
to the point where it would make sense. Like here, it's like it's not holding this line. If you was to move it like this, you could say, okay, well, yeah, it held this line. Or even I wouldn't even be mad if you was to do it right, I wouldn't be mad at that either because you can kind of say, well, it's holding this, it wicked off right here. I wouldn't even be mad at that.
Okay.
Like that second connection is important. It can't be going through like this, like that right there.
All over the place. Yeah. Gotcha.
I don't know if that makes sense or if it answered it a little
No,
bit.
no, that make a lot of sense.
Yeah, I know I was gonna have to show it to you because me saying it, that wasn't gonna make no sense. Me saying it.
Yeah, no, that make a lot of sense.
Yep, that's a good question because the trend line is nothing but another form of support or resistance. A lot of times you see it kind of bounce the bottom trend line, getting close to top trend line, bottom trend line. It hit the top trend line here perfectly. So drawing the trend line is kind of going to be like the levels a little bit. It's not always going to be 1,000%, but You can get them pretty close. But that's a really, really good question. That's something
Okay,
that I had trouble with too.
appreciate it.
Oh yeah. Anybody else got a question about anything at all? Right? If you do happen to think of something, you just unmute yourself and start talking. I mean, it's fine. It don't bother me. So if y'all think of something, just drop it in the chat or just unmute yourself. It's fine. All right. Today is the third class. This is labeled 4, but we kind of already went past a lot of stuff in class 3 because a lot of you have experience already. So I usually didn't spend as much time as I usually would because a lot of you kind of get it. And if you don't, I mean that's fine because we got a lot of time. We're gonna keep going over the same stuff every single day. Nothing from the past classes is gonna go away. It's gonna keep popping up every day, more and more. Um, so this one says class 4, but we're on class 3. The last slide we looked at said class 3. So today we're gonna be talking about basic structure. We're gonna be talking about chart patterns, and we're gonna be talking about making a watch list. All right. So this class is starting to get into stuff that y'all actually care about. Y'all were like, man, I'm tired of talking about levels and all this basic stuff. Even though that stuff is important, it can get a little boring though. Um, we're gonna talk about these 3 things here, and when it gets to making a watch list, it's gonna really tie in together all of our principles that we've been talking about. So I'm gonna go through the principles again here. All right. So you have the option contract basics. That's number one. You have to understand that. Without understanding that, that's like trying to ride a bike with no pedal or something. All right. So you got option contract basics. Then when you get into your technical analysis, you have your time frames, you have your candlesticks, you have your levels, you have your what's it? Candlesticks. We got levels. We got your trends and trend lines. Right. So a trend would be sort of the basic structure. Trend lines. We talked about that. We know that the levels and trend lines are what make up chart patterns. So this is why we're not learning chart patterns until now, because if you don't understand the trend lines and the levels, you can't understand the patterns. All right. Then you got the chart patterns. Then number 7, it's a little iffy one because you don't really need it, but it does help with probability, and that is indicators number 7. So on that P word already being used, not even 10 minutes into the start, probability. All right, that's all that this stuff is probability. Okay, we're gonna jump straight into it, man. So we talked about this a little bit as far as basic structure, but we haven't went in depth. So the market moves in 3 ways, right? So you have a uptrend, which is making higher highs and higher lows. All right, you have a downtrend where the candles are making lower highs and lower lows. And then you have the third trend, which is really not a trend, where it's going sideways or it's stagnant. We're trading options, we're betting on it to go up or down. So we don't want to be in anything that's just going sideways. We're going to be losing money. All right. So we're going to be talking about how to kind of identify this and how do we use this in our trading. Why is it important? All right. So we're going to go straight to the charts. We're going to go straight to the charts. All right. And as always, you want to kind of do top-down analysis because you always want to see where's the larger trend coming from at the moment. When you look at a chart, you will start to see, is it going down, is it going up, or is it going sideways? Now, if you go back far enough, you can always say that something's going up, you know, mostly if the stock has been around for a long time. Most of them are a lot higher than what they were before. But you do have things called counter trends. So I'm going to clear everything off of here. And although AMD in the super long term has been going up, This is just an example right here. Let's use this example. Let's use this example right here. When AMD was going up at this point in time, you can say that this was trying to make a series of higher highs and higher lows at this point of time. Because you have a low right here, if it'll let me press it. You have a low in this area, and then you have a high in this area. Okay, you have another low here, but what do you notice about this low compared to that one? That one is a lot higher than that. Okay, and what this helps indicate is that this may be about to start a trend. All right, so this isn't officially a trend until, sort of just like the trend line, two of them, at least two of them happen. So you have this here, then you have this higher low, but it does not count until this is broken. Okay, until that previous high is broken, this does not count. Okay, so at the point where this is broken, this is now the closest higher low. And as it comes down again, here is your new higher low. And this is your next higher high. So on and so forth. Okay, so you can kind of keep doing this up and down until this trend kind of changes. So you got higher low, higher low, higher low, higher low, until you start to get up here. All right, when you start to get up here, it does try to start changing just a little bit. Now, the question is, what do you use these for? So this is determining the trend. Okay, the trend here is upward, and technically, until the previous higher low is broken, the trend really is not over. Okay, so until these previous higher lows are broken, this is not over. All right, so if you was to see this right here, and this is how we're going to go back and use those basic concepts. This is why we learn candlesticks. Let's say you see this push up here, and you see this stock going down, going down. You don't really see a bunch of candles that you like, but you see this one right here. What kind of candle? Let me make it a little bigger. What type of candle is this right here? And what does it mean?
Pin bar.
Yep. Pin bar, bullish hammer, whatever you want to call it. All right. So that indicates what?
Reversal.
Mm-hmm. It indicates a possible reversal. Now, here's the part. Here's the part that kind of ties in, makes it important. Technically, if you was to get in here, you was like, okay, I'm waiting on this thing to show me that buyers are back in. You see this right here and you get in. The question is, where does the trade not work anymore? The trade technically doesn't work anymore when this area down here is broken. Because anything that is holding above this low down here has a chance to get bought up and become a higher low. So anything above this area is still considered bullish. Just because it took a lot of candles to get here, it's still considered bullish. If this was to keep going down and break these lows, that would continue this larger trend here at the time here. Because the trends, they constantly change. But as long as this low was held, this was bullish. So technically, if you was to get in this trade, you really would have no reason to sell at all, right? You really have no reason to sell. You might start getting a little cautious around here, all right? Then after this new high is broken, this is now, it's like your stop loss moves, okay? So if you was to get in here because you see buyers are in here, technically your stop loss would be the next point where the structure is broken, which would be around here, okay? Now there's another way to kind of do a entry that we're going to talk about in another class, but for this one, we're going to talk about just this method. So technically your stop loss would be if this thing breaks down here. Anything else is just noise. Anything in between your target and your stop loss is nothing but noise. All right. So as this high is broken right here, this area now becomes the new stop. You're moving your stop up, right? So now as it's broken, it comes down. All of this right here is still bullish, okay? Because this was the higher high. This area is the higher low. This is the low point that it dropped to after making the new high. So it's good until this is broken. And some people like to get even more risky, which this is a little bit more advanced that we'll talk about as we do entries and things like that. It maybe say, okay, well, I don't want to hold it this far because that is a far drop. Maybe you can start saying, okay, under this point to be safe, because this minimizes your risk. Because technically, if it starts to break under here, then you start to have a lot of room to the downside. And it kind of just keeps going. This is broken. It's a new higher high. This is still your closest higher low, this area right here. Even though all of this dropped, you still never broke this previous low. So when it's dropping and it's trying to find a low, we're looking for those signals. We're looking for those bullish signals, right? And we're looking at it from a daily chart, but it's the same exact thing from the 5 minute, from the 1 minute. Nothing changes except the time frame. So we can literally show this on a 1 minute, 5 minute, nothing changes. This is the exact same thing, whether you're day trading or swing trading. The exact same thing. When it's pulling back here, maybe you're looking for a bullish candle that you're looking for. Even if you was to say, okay, this is a bullish hammer. If you was to enter here, your stop could be this area here again. Same spot. Same spot along this area. Anything that holds above here is still bullish, right? Because this was a bullish candle, but it did go a little lower. That doesn't mean that it was bearish. The contrast probably would have been down a little bit, but it's not bearish because it's still holding these higher lows. It's still constantly making higher highs and higher lows. I don't know if this kind of makes sense a little bit. It's a little tough to understand when you're first seeing it, but the more you kind of look at it, it starts making more sense. Any questions so far? This is the uptrend side. As we start talking about an entry, we'll start talking more and more about, you know, kind of where you want to stop out at, and where it's too far, and risk to reward, all of that stuff. We're gonna get all of that.
Yeah, I kind of have a question. Why is the lower support, that green box you drew, how come it's a box and not just like a flat line at the bottom of the low?
Yeah, you can do the flat line. I just drew the box just because.
Oh, okay.
Yep. Yep. So if I was just to use the flat line, the definite line in the sand would have to be right there.
Okay.
Which, what a coincidence. What a coincidence that that is also like a level here. Got multiple touches here, multiple touches here, What a coincidence. So it's kind of like it's that confluence coming back again. So you got if it was to be breaking down here, is this was your stop loss, you could say, okay, well, this is looking like a level. If it holds the level, it's good. This is also the higher low at the same time. Kind of like confluence. Yeah, you can do the box. I just did the box just because I seen it right there. But yeah, that would definitely be the line in the sand.
That makes sense. Thank you.
Yep, no problem.
Hey RJ, I got a question for you.
Mhm.
If you move up a little bit, where I get usually get like messed up is around the 115 area. When it get choppy, um, that's when I get lost. Like I get lost where I don't know which direction it's really going. If you go up to like 115 area up here,
Up in here.
yeah, that's where I usually get like I would think, all right, so when it go to 130, I would say what? That's a higher high, right? Then does it come to a higher low? And then would you consider that a higher high again? Like it seemed like a double top up right there. Yep.
Yeah, this one would be a little tough. This one would be a little tough, and you would definitely want to start being cautious because this is a pattern that perhaps we're going to talk about today. That was on the stock market last week. This is actually a bearish engulfing. So, yeah, although this is a higher high, this candle is a bearish engulfing, which just means you have a huge red candle that engulfs the entire previous green candle. So
Okay.
that does kind of foreshadow a downtrend. But even without knowing that, I would still say that even if I was to say, okay, I'm getting in here, like because at one point this was a green candle before the sellers took over. The stop for me would definitely be still right there for me.
Okay.
Just because at this point we broken the highs. And if it breaks here, this is kind of like breaking the higher low to a certain extent because it would just be it would be tough to try to hold it um down here, or even if you was wanting to play it safe and be like, okay, well, maybe I would say that this is a low that I'm willing to risk. Even that, man, that's 115 to 93. That's a lot.
Yeah.
So it comes down to the risk reward too. Comes down to that too.
Okay. Okay.
It's just so much stuff that goes into one single play, man. This is why we learn all the basics because it's like, well, yeah, but then it has this and then it has this. It's so much stuff that goes into a single play.
Okay. All right. Thanks.
Oh yeah, no problem. Any other questions before we get going here? Right now, so we're good with the uptrend. Whether you're in an uptrend or a downtrend, you also are going to have what you call counter trends. Okay, so a counter trend is just the trend that's going opposite of what the bigger trend is at the moment. So, in a sense, if we was to really zoom out, in a sense, this uptrend is kind of like a counter trend in a bigger sense, right? Because this is actually a downtrend until this was broken, right? And we're gonna once we start talking about the lower highs, lower lows, well, we can actually say that now. We can start looking at that now. Once we start looking at lower highs, lower lows, here's a high, here's a lower high, just a series of lower highs. And the same way with this, as in the bears are winning until the previous one is broken, it's the same thing here. So at this point down here, technically, this is still bearish until the previous lower high is broken on a larger scale. So really, when you're down here, all of this can technically get sold off, and you really don't have confirmation until way up here, because this was the closest low or high. It's a lot to digest. It's just gonna take practice. It's a lot to digest. So you have counter trends, all right? So especially when you broke this right here, that kind of killed this trend and started making its own trend upward. So then it started to pull back, right? So when it started to pull back, you still didn't break any of this from down here. So technically, all of this is still a counter trend. All right. And notice on this counter trend, let's see how we connect our trend line right here. I'll do it as neat as I can for you. Here would be, I'd say here. I'd make it here. Just because if you make it there, kind of doesn't look right a little bit. But I'd make it here. Be safe. All right. So even with this trend here going upward, you have this counter trend, and it is a counter trend until this down here is broken. As long as this is not broken, all of this is still good to possibly get pushed to the upside, which it did. Okay. But notice we haven't got to the patterns yet. But does anybody know what this is called?
Bull flag.
A bull flag pattern. So what did we say earlier? These patterns are made from these levels and these trend lines. Okay. So the trend lines and trends, this counter trend is doing nothing but making this pattern. You can't understand the patterns before you understand the trends. You can't understand trends before you understand the candlesticks and the levels. All right. So all this stuff kind of comes together. So where it tells you, or this tells you, is this counter trend is making that series of lower highs and lower lows. And it was pretty strong right here, pretty much if you wanted to have your line there until it broke this trend line, which this was really a false break, because if you was to look to get in here when it broke this trend line, that's typically what you look to do. If you was to look to get in here, what do you guys think your stop would be? This is a tricky one. What do you guys think your stop would be if you was to enter here on this breakout? It broke the trend line here. Where could your stop be? You got all the way down here. You got up in this area.
I would
Right
do
there.
maybe like, yeah, the 95 area maybe.
Yep, I like that 95 area. That's why I would definitely do mine, like a hard stop there. Some people might not even want to risk that much and maybe even put theirs here. You see that too? This little one right here on this breakout is trying to make a little base here or it pushed up there. This one would definitely be the hard stop, and you would see you would actually get stopped out on this one. So this one was definitely a false breakout that ended up pushing out eventually. So that one would have been a little tricky, depending on, of course, when you saw it and how you kind of viewed the pattern there. But that's the point where I kind of want you guys to get to, is every time you get to an entry, you're automatically looking for, where does it not work? That's the number one thing that you got to know. Before you talk about your target, before you think about your contract, how much money you're going to make, think about, where does this trade not work? That's the first thing you got to always think about, is where does this not work? Because if you got a 99% probability of being right, you still got a 1% chance of being wrong. All right. And you don't want that one wrong to blow your account, because it definitely will. So we always trade with a plan before we get into anything, we're always thinking first, where does it not work? All right. Let's see. So when this started breaking out again, kind of just ran, really didn't even try to make another little base or anything. It kind of ran, pushed back down, finally broke these highs eventually. It kind of got pretty messy around here. Got really messy around here. And this is why risk reward is also important, because technically, let's think about some scenarios. All right, let's think about some scenarios, because this is what you're gonna see a lot. Like I said, we about to get into some advanced stuff now. It's gonna get a little tougher from here. If you was looking at this and you know we're looking at AMD, we know that this thing is bullish. We see it's making higher highs, higher lows. We know that. All right. It broke the counter trend. It had a pullback, but then it had a bullish candle, like a really bullish candle like here. Where would your possible stop be? Because this is a breakout. If you was to try to get in on this candle, hopefully you not getting in way up here. Hopefully you catch it, a little bit before down here. But where would your stop be at that point? It's a tough one.
Right there, that support where that right there, yep.
Exactly. That's exactly what I would do. Right? I would find the local area of support or the local area where it started basing out, and I would use that as my stop, because although technically it's bullish until down here, think about your risk to reward, right? So at this point right now, you would be risking 16. That'll take it down to $120 plus from 120 down to this 94. That would be over $20 of risk, right? But if you do here, hopefully you don't get in way up here. You're just thinking, okay, where's a immediate place I know if it gets under here, I look to probably cut this thing, would definitely be here. And where would a target be? First target would be the highs. All right. So if you're trying to get in on a higher low, my target 9 times out of 10 is back to the highs, right? Unless you just get like a crazy percentage up before you even get there. Then as you break out here, finally make another high. Pulls back down. I wouldn't be mad if you kind of stopped out there, really, because at this red candle before it got pushed back up, anything above this level would have been fine, but it's a little tougher. That's when AMD just really started going crazy. Okay, so that is a little bit of the trends. Trends can be confusing because you got trends, you got counter trends, you got the downward trends, you got the up trends. We just looked at a uptrend. Does this kind of make sense a little bit?
Yep.
All right. Cool. Like I said, the trends part is probably, out of all of the pillars, this one's probably the toughest one to really understand. Just because it's so much going on. This is probably the toughest one to get. It's probably gonna take the most screen time to really start getting it. But as we talk about entries and exits and things like that, it'll become more and more clear. And as far as a downtrend, this stuff is exactly the same. Let me think of a stock that had a bull flag lately. Let me see. What had a bull flag lately? This one actually failed. The latest bull flag. This one actually failed. Right. So you had this sort of like a flag here. You got a run up, and then you have a counter trend. So this counter trend all the way down here. All right. So before it broke out, this was the low point here. So if anybody was to try to get in on any one of these two candles, the stop would definitely need to be no lower than here. Does that make sense?
Yep.
All right. Because if you don't choose that point, I don't know where your stop gonna be at. It's gonna be way down there. And then also take note too. It does look like there are big gaps on this stock, but from here to here, this is literally like $3. Right. So this stock doesn't move super fast like a Tesla, or it don't even move as fast as AMD. So take that into account too. Now, when it broke out right here, when it broke out, you'd be looking for this high, right? That would be the top of the flag. Will also be the highest high point that had been to at this time, because really back in the day it was higher than that. But at this time, that is the high that you would be looking for. If you was to get in here, I would do my stop here. I would personally do mine here if I was getting in at this breakout.
Why there?
I would do mine there just because I wouldn't be comfortable holding way down here. Like, just even in the context of the flag, typically on a pattern, you want to see, if you see it come back down inside of the pattern, you really want it to kind of stay within the trend line. So like the trend line, think of the trend line as like the resistance. So think of it breaking the resistance. You really want to see it break and retest. So the
Okay.
same way as we think of a break and retest on the level, you typically want to see the same thing on the trend line.
That makes sense.
Mm-hmm. Yep. Especially like this candle here. Oh man, yeah, that's a tough candle. That's tough. That's tough. And that's the thing about patterns, is patterns don't always have the clearest stop loss. Patterns don't always have the clearest stop loss. Break and retest have the best stop loss because it's super clear exactly where it does not work anymore, because it doesn't work wherever that next low is. A pattern, you might be in right here, your next place that has, because a pattern breakout is nothing but a momentum trade, right? So when you have momentum, this thing is pushing hard, right? So if it's pushing hard, your next low might not be until way down here, that's $8 away. That's quite a bit on this stock. Even this breakout here is $8 away, you know. So patterns, the stop loss on patterns is a lot more difficult than it is when trading a break and retest. But typically you want to see the same thing that you do on a like a regular level break and retest. So this one got up to the high point and couldn't really break out. Yeah, this one would have been a loss either way. Either way, this one would have been a loss. It's just a failed breakout. It had another bull flat pattern that it actually played out. before, I think. It was somewhere. I don't see it. It was somewhere else. It was somewhere else, but this one failed. This one failed. Think about
Hey,
the problem.
RJ.
Yep.
Oh yeah, quick question. So I know what we were saying, right? Like, if you were to get into this one, right, that stop will be around like that 178, basically that, that key level down there.
Mm-hmm.
So given that, I guess like take two is already down there, right? I guess like would it be like a good buying opportunity, or well, what you think about that? Since it's
Like,
kind of already at the stop.
yeah. That's a tough one because for me, like, and some people do trade like that. Like, it's nothing wrong with doing it because if you would have did it here, it would have worked. Um,
Yeah.
for me, I typically like my break and retest to kind of be sharp. Like, it just was.
Mm,
This one is so choppy on the way back. Not saying that it can't do right on the way back up, but at that point, if I was looking at it from that standpoint, I would just throw out the flag at that point and be like, okay, I'm looking at this strictly from the structure of the chart.
mm,
But even if I was looking at it strictly from the structure of the chart, you still want to see what type of candles right here.
yeah.
You still want to see those bullish hammers or something down here. So yeah, this could be a great dip buy, but it's the problem now is it doesn't have that momentum.
Mm,
It doesn't have that momentum.
gotcha.
Let me show you a perfect break and retest. This one isn't a pattern break and retest, but this is a break and retest. This is something that I probably should have got in today, to be honest with you. Probably should have called it, but we're looking at a firm, right? We're looking at a firm, and let's think about what we've kind of learned here. All right, so we see this thing, huge downtrend, right? Crazy downtrend, just making lower highs, lower lows. And at this point, since 2022, this was a high that could not be broken. Pretty much could not be broken. All right. So regardless of anything, when you think about levels, until this breaks, nothing is going to happen on this stop. All right. So you do have this huge run and you do have this smaller counter trend, but at the same time, until this is broken, it already rejected the highs pretty heavily. And then this took from December all the way to that August to even start pushing up again. Like, yeah, I hope you ain't gonna be in it that long, unless you in like some leaps or something. But I just say this to say, as far as the break and retest, this is the clear level, right? So this was 2022 resistance, 2023 resistance. What did we do here? We broke out. We have a sharp down move, right? So we have a pretty sharp down move, and it gives us a nice green candle here, right off of that level. Now, the question would be, where's your stop loss? Where's your stop loss at this point? Would your stop loss be this candle your stop loss?
Yeah, that's why I would put mine. Well, actually, maybe that one right there, that pin bar
Maybe this one?
under it. I know that's kind of a huge, depending on how long I'm in it, but
Mm-hmm.
I might put it at the high prior to that, kind of little over, like one high over. Yeah, like there.
Around
But
here.
not, yeah, to the left, kind of where it went up, went down and went, then it started to run. Yeah, like I might put it there.
Okay. And that's the beauty of it. None of that is really wrong. None of your answers were both different, but neither one is wrong. What it comes down to at this point is what's the risk and reward? Because at this point, and we're gonna talk about these tools as we start talking about interest too. But as far as the risk and reward, if we was to get in here and we was to say that this would be our stop, we're risking $12 on a $50 stop. That's a lot. So at this point, we would need something that's targeting. And for risk reward, you typically want a minimum of 2, right? So some people say 2.5 to 3, but you want typically a minimum of 2. So for this trade to even make sense for you, you would have to say, okay, I'm aiming for $25 above where it is now. If you was doing it here. Now we kind of get into the break and retest here, that's fine. But getting into the break and retest a little bit, if you can't do the stop at the next low, if that was going to be too far, your stop is going to simply be to close below your retest level. Right? And of course you can make it down, you can bring it a little lower because sometimes it'll wick off, but you will put your stop right below the retest level. And why does that make sense? Just simply because this is too far and this is where it has to hold. So if it doesn't hold this, it's a lot more risky. It's a lot more risky if it gets down here, if it's going to go back up or not. I mean, you're still holding the higher low, but at what cost? So if it's too far down and it doesn't make sense from a risk reward standpoint, you take that candle here. And of course, you want to always bring it down a little bit, give yourself a little room. And you may ask, well, how do you find your targets? This is where we start getting to advanced stuff. I don't know if we'll make it to the watch. We'll make it to the watch list, but this is where stuff kind of gets advanced. We think about the break and retest, and we're gonna talk about break and retest. Probably gonna be all of next class. If we was to enter here, the first target is kind of always that high, right? So at this point, you really still don't have a good risk reward. Even at this point, you would have to be aiming for something higher, right? So you would have to either stretch out your risk reward higher here, or what concept have we talked about that can tell you how far something can go? Now we start to put these pillars together. What concept can you use to figure out how far a stock can go up or down before it gets into trouble?
Key levels.
Exactly. So you can take that high, or you can say, all right, let me see if I have a key level somewhere that I can really, really use. We don't have anything to take from any of this. So we have to go way back here. We got to go way back here. It's a huge red count. I don't know what happened right here. This might have been earnings or something. If I was looking here, I wouldn't be mad. I wouldn't be mad at this area. It's not perfect, but it's definitely around here, which would be around 69 to 69.14. You got 1, 2, 3, 4. Yeah, that is a level. Yeah, I'm tripping. That's a level. That's definitely a level. Yeah. That's definitely a spot. So think about what you have. Think about what you have, though. You have the break and retest here boom. First target would be the high, which is here. But you know, from a level standpoint, your next level is not until you get up to 69. And look what happened with this. Do you have any type of, since you would, if you would have got in here, do you have any resistance at all the way up to this level?
At least nothing significant.
Nothing significant at all that would deter you all the way up to that level that we found here. Notice I didn't have that marked. We just marked it here. And even you could even tell that this was a struggle point because look what it was doing right here. Chopping, struggling. So that's a couple ways to determine how far something can go. That's the break and retest. And the break and retest can be applied on a chart pattern, can be applied on levels. The biggest part about the break and retest is finding where it doesn't work. Like I said, that's the most important part. Where doesn't it work? We found out that this was going to be way too far down. You can use this retest candle. And there's a dude that posts a lot of his trades on YouTube. I'm gonna send you guys his channel. He does this type of method. He goes a little bit further into the structure part than I do. But I'm gonna send you guys his video because he's really, really good with the break and retest. He's really good with break and retest. But does this make sense a little bit? It's not gonna make a lot of sense because it's your first time seeing it, but does this make sense a little bit when we start trying to incorporate the trends and the break and retest and the levels?
Would you say that since it got rejected off of that key level today, the one that was holding for like 2022, 2023, that it might be a good entry point since it kind of got close and bounced, or would we wait till it retraces all the way there and then see what it does? Like, is it not close enough yet?
Yeah, that's the risky part. That is the risky part because levels aren't always gonna be super exact. And I was looking at this at the end of the day, and I was like, man, this looks good. Now, you don't have to always wait because there are, depending on which way you guys kind of go, as far as after this, you guys want to do like, like supply and demand. If you guys go that type of route, if you was looking at like supply and demand, you may have a entry here regardless. But as far as a level, you typically wanted to see it down here, but I couldn't talk you off of that. I almost couldn't talk myself off of taking it today, honestly. I would do the same thing at this point. At this point, I would be saying, okay, well, where am I targeting? What's my risk? What's my reward? That's what I should have did earlier. I would say, okay, where's my risk and reward? Where does this not work? Where do we say, okay, this does not work anymore? If we was to get in here, where does it not work?
Probably right below the resist or the support line at 51.75.
Perfect. So I know it closes below here, and I will give it a little bit of room. I know it doesn't work. Cool. Now, think about our concept, our trends. Boom. This was a higher low. You really didn't have a chance to make a higher low at any of this, really. So we kind of just came back and retested pretty quickly. So this would definitely be the spot that needs to hold. But the question would be, where would you target? Where would your target be? We have what we know. Most important thing, we got that out of the way. Where does it not work? We got that. Where's our target though?
I would say either uh the start of the two green candles or the bottom of it, or just the top of that red engulfing candle that started that fall, I guess.
All right. So you said here, up here, and then
Uh, No, just on our run, kind of just like the how it had the 4. Yeah, I would put it towards the top of that move.
That's absolutely perfect. That's exactly what I would do. That is literally exactly how I would do it. Because at this point, what did we talk about earlier? We talked about we have the trend, but we also have our counter trend, right? So we look at our counter trend. This counter trend won't be broken until this. This will break our counter trend, right? This will break our counter trend. Who knows what's going to happen up here at this resistance again, but this would definitely break our counter trend. Even if we were just targeting here, you're risking $3 to possibly make 13. Now, do we have to hold it all the way up there? No, because this is a smaller stop. This thing goes up a few dollars. You're gonna be up. Gonna be up. All right. That was perfect. Yeah, that was picture perfect. So I guess kind of that was a super long answer to your question, but I wouldn't be mad at it. I guess the simple answer would be just see what your risk reward would be. Because it's super close, just see what the risk reward would be. In this case, I would say it's worth it. And this is something I'm definitely watching tomorrow. If this thing gets some upward momentum, I'll look to probably day trade it. I don't know how much I trust swings right now just because of the overall market, but this could definitely get some momentum to the upside. Does this make sense to everybody? If not, then please let me know so we can try to break it down some more.
That would make a lot of sense.
All right. All right. So all I'm doing is giving y'all tools. That's it. You don't have to do patterns. You don't have to do break and retest. You can do either or. You can do a whole nother system. But the tools that I'm giving you are going to help you no matter which style you choose. If you just want to do break and retest, if you just want to do patterns, you're going to need these tools right here. You're going to need these basic principles. That's good. A good trade. That's going to be at the top of the list for sure. Any questions about trends at all?
Do you watch, this isn't about trends, but do you watch pre-market or do you kind of only take it when it opens type of thing?
Yeah, I consider pre-market too. I consider pre-market because let's use this example today. See, I kind of got some stuff drawn, but pre-market is important because think about, so we had our level here. I'll clear this off because I can just talk about it. I don't want to remove everything though. You know, it's fine. It's cool. Whatever. Think about today. We know we had this low on SPY at 578. We had a gap fill right here. And we know we have a low that we can get possibly get down to down here. Probably not gonna happen in a day, but that's a scenario. During pre-market, in a picture perfect world, we would have had SPY open above this level so we can take the break and retest here and take it down to here. But
Oh.
we didn't get that though. We had the pre-market open up in here. So because the pre-market open here, we got to tweak our plan a little bit and say, okay, we can still use the break and retest, but now we just have to use it up here to try to take it down further like we did today. Because if we would have just used this candle, it would have been hard to kind of have a plan because it opened up below this level here. So yeah, pre-market is important for me, especially because it when it starts opening below those levels, you got to use that pre-market. I don't know if that makes sense or not.
Yeah, that makes sense. Thank you.
Oh yeah, no problem. So this was the retest here. So you break down, you look for a retest. You broke down, but you didn't retest yet at all. You're looking for a retest. All right. So we know this is the level because this was a support from Friday. It's pretty much the same thing as a firm, but in reverse. Going to the downside now. Break a level. You're looking for the retest. All right. Looking for a retest up here. And you're looking for a bearish candle because you're looking to take it back down. So when you get that bearish candle, you typically want to aim for the lows, right? So you typically want to aim for the lows, which would be somewhere down here. But if any of you guys was on the live trade with us this morning, we didn't take it down to the lows, right? Because I didn't do that because of how choppy the market has been. We literally got out on this candle, right? And the reason that I did that is just because the market has been bouncing up and down a lot, which it did it again today. So we actually got a really good exit on there. But typically you want to aim for the lows, but you don't have to take it all the way down there to make a profit, right? So by the time we sold the contracts, we got in on this good retest candle. Contracts was up 15 to 17% when people were selling. And some even a lot more than that if they got closer expirations. So yeah, that was a live example of the break and retest in full effect today. Any more questions before we talk about the chart patterns? And like I said, this stuff is going to come up every single class. We're not going to talk about something one time and never talk about it again. As you can see, every class is just building upon the previous stuff, and this is just how it's going to continue to be. Just like we're talking about the break and retest, we couldn't talk about that until we started talking about the higher highs, higher lows, right? So if we was thinking about, well, for those of you who was on the live stream this morning, don't try not to answer it, but because we did talk about this on the live stream, getting in on this candle here, this is where we got inputs. What do you guys think our stop loss was? What do you guys think our stop loss was when we got in on this candle? Regardless of anything, where do you think we would say it does not work?
That resistance level, break above that resistance level, or close above that resistance level.
Exactly. That's exactly what I said. A close above that resistance, and we'll be out. Right? And initially was looking to take it all the way down, but it was so choppy, just up and down, up and down. We just took it here. A close above here was definitely the stop. And I actually kind of wanted it to push up a little bit, get closer to it, and come back down to add contracts, but was only able to get one on there. Yep, that's perfect. And that's perfect example of you're using that candle as a stop because you really don't have anything else to go off of. You don't have the previous, well, I guess you do have a previous lower high, but what do we say? What's the risk to reward? When you think about what's the next previous lower high, you thinking about up in here or up in here. That's pretty far, right? So that's $3 from, well, actually from this point, that's $4 alone. So this is a case just like a firm where you got to use that candle instead because of risk to reward. So yep. Yep, that's an example right there. Any more questions before we do chart patterns? Patterns don't take long because I only use a few of them. There's a lot of patterns, but like I always tell you, I'm gonna teach you everything you need to know and nothing you don't. Right? See, it's making sense. Okay. We'll go back to the slides. I forgot to go back to the slides. I've been talking about these charts so much. Let's see what the slides say. Talked about the trend. Let's talk about chart patterns. What are the chart patterns? So I've said this kind of a few times. What makes the chart patterns? Anybody remember what makes a chart pattern? Two concepts that we talked about make chart patterns. What are they?
Trend lines.
Mm-hmm. Yep, that's one. And what is the?
Candlesticks.
Yep. Mm-hmm. Trend lines and candlesticks are going to make up that chart pattern. And in rare occasions, the levels. Rare occasions, there are some chart patterns that use a level as far as making the chart pattern, but it's only a couple of them. So, yep, those candlesticks and those trend lines are going to make that chart pattern. And in rare cases, the levels. All right. So you got to understand those two basic concepts before you understand chart patterns. Why are they useful? My favorite word. What's that favorite word?
Probability.
Probability.
Probability. That is why chart patterns are so useful because they give you high probability. These are high probability setups, meaning when you see these, more times than not, they're going to work. Something like TTWO, it didn't work. Like we said, if you have a high chance of being right, you still got a chance of being wrong, right? But they're going to work more times than not. When are they best used? Chart patterns are best used when the overall market agrees with the move. What does that mean? That means if you was to look at SPY and you was to use our concept, a trend, if you see SPY is trending upward, right? You think SPY is bullish, we would want to look for bullish chart patterns. We don't want to look for bearish chart patterns while the overall market, SPY and QQQ, is trending up. We want to be bandwagoners. We bandwagons over here. All right. So we hopping on whoever winning, we hopping on their coattail, whether it's the Bulls or the Bears. If the Bulls winning, we look for bullish patterns. We bandwagon. When the Bears start winning, just like they did earlier today, we was looking for Bears plays. We don't care who winning. We just want to be on the right team. All right. So when are they best used? Whenever you have that same direction from SPY and QQQ, aka the overall market. Okay. Now you have continuation patterns. This is the first type of pattern, and these are probably the easiest ones, right? So these are flags, right? A flag pattern is a continuation pattern that you will only take towards the direction from which it came. Okay, so you have bull flags and you have bear flags. All right, a bull flag, and I'm gonna draw this out for you. We're gonna draw it out. I'm a very visual person. A bull flag is shown when you have a uptrend, right? So you have an uptrend, and then you have a pullback, right? And your pullback, your trend lines and your pullback are going to be going the same direction. That's going to be key because of another type of pattern we're going to learn. Your flag pattern, your trend lines are going to be going in the same direction, and it should form just like a flag. Okay? Why is it called a bull flag? Why is it called a bull flag? Anybody remember why we just said that? Why is it called a bullish flag?
Because that's the direction it should continue in once it breaks out,
Right.
like up.
Exactly. That's the direction that it should continue in, and that's the direction from which it came from. Where was the trend before it formed the flag? That's going to tell you if it's a bullish flag or bearish flag. The trend was bullish, going up, making higher highs, higher lows before it formed it. It's a bullish flag. We're not looking to trade a bull flag to the downside, right? We're looking to trade bull flags only to the upside. Flags are continuation patterns. We're looking to continue from the direction from which we came. Okay. From these bull flag patterns, I'll save that. I'll save that. We'll save the entries on these. We'll just talk about the patterns themselves. We'll talk about entries on another class. So that's the bull flag pattern. On the opposite end, we have the bear flag pattern. Bearish flag because it was in a downtrend before it formed the flag to the upside. Okay? It just flipped it on its head. Bearish flag pattern, we're looking to take it to the downside. Do not try to trade a bear flag to the upside. We're looking to trade it from the direction from which it came. Okay? So let's see if I can draw it here. It'll look something like this. Take that off. I'm going to change the color of this in just a second. But we'll make it green. Why not? So the stock should be moving something like this. You have an uptrend, you have the pullback, you have the breakout. Bear flag, downtrend, lower highs, lower lows, lower highs, lower lows. Still holding, trying to take it down. That's the flag pattern. Okay. When do you want to look for these flag patterns? When would be the best time to use the flag patterns? Let's see who was paying attention.
When it's going in the direction of the market.
Exactly. Exactly. So at this point in time, would it be super safe to play a bull flag right now?
Nope.
Yeah. It wouldn't be super safe to play a bull flag right now. Could it still play out? Yes. But at the moment, I'm probably more so looking for bear flags at the moment right now, unless I can get back bullish. All right. And then vice versa. Vice versa. So that is the continuation pattern. It's another type of pattern that is a neutral pattern. We go back to our slides. We'll talk about the entries and stop losses. Well, we already kind of talked about it a little bit, but we'll talk about that more in the next class because we'll have to push the watch list to next class too. Neutral patterns are pennant patterns, right? So a pennant pattern is also called a triangle pattern, okay? And what's the difference between the flag and the pattern, the flag and the pennant pattern or triangle pattern is only one thing, but that one thing is huge. The difference is the shape of that bottom trend line. If I can draw it right here. I cannot draw this thing right. Anyway, it's supposed to look like a triangle. It's supposed to look like a triangle. That's a little better. Okay, so notice here, let me draw the flag right beside it so y'all can see it visually. Let me draw the flag right beside it because it's a very subtle difference, but it means a lot. Look at how this bottom trend line is here. And look at how the bottom trend line is here. Why is that significant? This is a continuation pattern. You're looking for it to go to the upside. You're looking for this. This can go either way. Why can it go either way? Because what that bottom trend line is telling you, you see how this trend line, remember we said that trend lines can act as a what? What other concept can it act as? Trend lines can act as a what?
The support.
They can act as support and resistance. So these two can be support and resistance here, but they're still going in the same direction. If this is acting as a support and resistance, you would have a uptrend when you look at it from here. When you look at it from here, you have a downtrend. That's confusing. It will look like an uptrend from here, look like a downtrend from here. That's how the pennant is made. It's converging. Okay. So how do you know which way it's gonna go? You really don't. You really don't. You still want to take the side of the direction from which it came, but you can't be super locked in on that way. Okay. You can't be super locked in on that direction because they're neutral, because it has a downtrend from here, but it has a uptrend from this point. Okay. And they're neutral because it can break either way. So you have to wait and see which way it breaks and which way it has that volume. But typically, rule of thumb, you still want to try to look for it to break out the direction from which it came. And let's see if my drawing skills are good enough to draw it from the downside. Not great. Not great. But you would have a uptrend. The stock would be uptrending from here, but from here, it would be downtrend. So it would look a little something maybe like this. You don't know which way it's gonna go. All right. So it's making these lower highs here, but it's also making these higher lows here. That's conflicting. That's why they're neutral patterns. You don't know which way. Rule of thumb, you're looking for the direction from which it came. And to be completely honest with y'all, there are a lot more chart patterns, but these two are the ones that you're gonna see the most. If you look at 9/10 of the stuff that I trade, when I talk about chart patterns, it's coming from a flag pattern. This one, the flag pattern forms every day. All right, there's some type of continuation almost every day in the market, pretty much. All right. Let's see. I think I got another type of pattern on here, though. I might have the wedge. Yep. I do have the wedge. Okay. So reversal pattern is, and this is the last thing we're going to talk about. We ain't going to be able to get to the watch list today, but we have a reversal pattern called a wedge pattern. Now, the wedge looks very similar to the flag, right? It looks similar to the flag, but really the difference between a flag and a wedge, notice here on our flag, a lot of times it typically stays wide, right? So it still stays in this wide range here. But on a wedge, I'm gonna try to draw it. On a wedge, what you will notice is you will have this, but like it will just get tighter and tighter and tighter, right? So the flag pattern will usually stay wide. The wedge will get smaller and smaller as you go, kind of like here. Okay, so you have a falling wedge and a rising wedge. Now, don't get confused with the two because they mean the opposite. They mean the opposite. All right, a falling wedge is a bullish pattern. This is why they're reversal patterns. A falling wedge is a bullish pattern. A falling wedge means that the stock has failed, right? It has failed, but it's gonna look something like this. It's gonna start forming a little something like, actually, this is the example here. It's bearish, right? But that wedge is getting tighter and tighter and tighter and tighter. You see how wide it started out? Then it got smaller and smaller and smaller and smaller. A falling wedge is a bullish pattern. Same thing like other patterns. You're looking for it to break out. Falling wedge, you only play to the upside. You don't play a falling wedge to the downside. All right? Falling wedge, bullish pattern, you're looking to play it to the upside. A rising wedge, which I got an example for y'all here. Actually, I'm already on SPY. Rising wedge is a bearish pattern. So a rising wedge forms when the stock, see if we can draw it pretty decent here. A rising wedge is formed in a uptrend. It's kind of tough to draw it, but rising wedge is formed in a uptrend, and you typically want to see it get smaller and smaller, just like it does here. So it starts off super wide, smaller, smaller, and smaller, and smaller. So aspiring a little bit of a rising wedge, maybe. Okay. Does that mean SPY is going to be bearish or long term? That's not what that means, though. All right. So rising wedges, they don't occur a whole lot. You'll see a falling wedge a lot more than you see a rising wedge. But those two wedges don't occur nearly as much as flags and pennants. Flag patterns are number one. They occur the most. Learn that first. Flags. You'll be perfectly fine if you learn no other chart pattern than a flag. Pennant patterns, they are neutral because they can go either way. They occur a lot too, but they're not as reliant as a flag. These reversal patterns, that is the wedges. Falling wedge is bullish. Rising wedge is bearish. Okay, so we got three types of chart patterns that we got. We got continuation, we have a neutral, and we have a reversal. Three types of patterns. And there are more patterns that we're going to talk about at later dates, because you have things such as the head and shoulders. All right, you have things such as the bullish engulfing, bearish engulfing. You know, you got more chart patterns, but we started out with these because these are the most basic ones that you need to know. All right. Any questions about any of the chart patterns? Chart patterns ain't too hard.
For the wedges, like on the slides, it kind of has like a big drop and then it wedges, whereas SPY kind of just creates its own wedge. Is it similar to flags where they kind of have a direction they came from, or not really, if that makes sense? Like their own pole before they wedge.
Uh, hmm. It's it's tough because the pole is pretty much just going in the opposite direction from the breakout. Because a rising wedge is going to have a pole to the upside, but you're looking to trade it to
Okay.
the downside.
Yeah, that makes sense.
Mm-hmm. Yeah, so that one is a little wonky. Any more questions about the chart patterns? Now I got all kind of stuff on chart patterns. I'm gonna drop a lot of videos in there tonight about trends, trend lines, chart patterns. Got a lot of stuff dropping there because it's so much to it. right? If not, unfortunately, we can't make it to the watch list today. It's where the real fun begins on the watch list. That's where we're gonna start putting everything together. But next class pretty much gonna be all about the watch list and talking more about the trend. Understanding the trend is gonna be super important when you're making a watch list. So that's gonna be next class. If you got any question about anything, of course I'm gonna stay on if you got any questions. If not, then look out for the videos that I'm gonna be dropping between tonight and tomorrow, so you guys can look at those. But I appreciate y'all hopping on. If y'all got a question about anything, I'll be on until everybody's questions are answered.
Yeah, quick question, OJ. You kind of spoke about it earlier. Like given the overall choppiness, or well, just saying that we possibly heading into a bear market. As far as swing trade, like if you so you know say the larger the time frame, the bigger the move. But like if I look on a daily or a weekly and I see like a reversal, like a pin bar or something like that, and then I'm looking to possibly swing trade it, but then the overall direction of the market is bearish. Like I guess what I'm saying is it basically safe to say right now this just ain't the environment for swing trade?
You say, is it safe to say what about swing trading?
That this probably ain't the market to be swing trading right now, even if you see a setup?
Yeah, yeah, because it's so volatile. It's so volatile right now. It's a lot harder to swing. Um, Usually when the market goes down, it's a lot more volatile than it is when it goes up. When it's going up, it's pretty much just slow grinding up. But when it's going down, it's like it's just volatile on the way down. Like you might miss some moves on the way down because it'll shoot up a lot, then come back down. So it's a lot tougher to swing right now.
Yeah, I appreciate it. Because I've been seeing a couple of things, and I'm like, man, even if I see it on a daily or weekly, I'm like, I don't trust it because might gap down in the morning or something like that.
Right. Yeah, swings have been rough first part of the year and toward the end of last year because it got so volatile. Hopefully it get back right soon.
Appreciate it.
No problem.
Hey, Andre, could you go over the pennant pattern? Do you have any more examples?
Example of a pennant pattern. Let me see. Something had a pennant before. Might have to. I gotta bring you back, but I think Tesla had a pennant pattern right here. Yep, right here. Tesla got this up move. This top trend line. This top trend line indicates that it's making lower highs, right?
Mm.
And boom. This bottom trend line though, even it up a little bit. This bottom trend line is saying that we're making higher lows. So it's conflicting. And we got to also think about what a triangle pattern really tells you. A triangle pattern tells you that there's indecision in the market.
Okay.
And that's shown because you got two different trends at one time. So you just wait and see who wins. And yeah, Bulls end up winning big time.
Okay. Gotcha, gotcha, gotcha. All right, thanks.
No
One
problem.
second to see it.
Appreciate it, LJ. Till the next time.
Oh, yes, sir. Appreciate you.
All right, Audrey, you have a good night and good luck at work.
Oh, yeah. Appreciate it, man. About that time, unfortunately.
Thanks, RJ. I'll see you hopefully in the live tomorrow.
Oh, yeah. Bright and early.
Hey,
Appreciate you, bro.
appreciate you, RJ.
No problem. No problem. Oh, yeah. Appreciate it, Joy. Appreciate it. Yeah, we putting them pieces together.